yesterday we refreshed or started dealing with step two, which is defining an area of interest or value. Um, so today we will start from here, and then by the end of the three sessions, I will hope that we can get to step three, so that we'll see how we can put everything together. So, in order to define your area of interest, um, the first thing that you have to do, and I think I have made a spelling mistake from the writing I have here, but what I meant to say here is um, I started by explaining what I think an area of interest is, and I'm saying that it is a particular level of price on your chart or on an asset that is psychologically compelling for participants to engage or be active in the market. So, um, any area that that most people or people will be interested to jump into the market, that can be an area of interest. But not just that. Okay, the area of interest, we must check that previously participants have engaged in that level. Okay, that's very, so this is about using the history, okay, to also help you to, um, I mean, get an insight into what is likely to happen. Because whatever has happened already or has happened before has the higher probability of happening again. Okay, for example, if there was a reaction or a rejection or something happened at a particular price, let's say 3 months ago, 1 month ago, 2 months ago, in the future, if price moves away from that level and it comes back there again, it is likely that a similar or the same reaction might happen. It's not 100% sure, but it's similar. Okay. So you must check that in the past, participants have engaged at that level that you will find to be psychologically compelling. Then this area should be within a premium or discount zone. So yesterday, when we were framing um, when we're learning about the trend, or we were understanding how we can find who is dominating the market. We also learned about how to get our swing structure or our range. Okay. So, for example, if you have a previous lower low, um, a previous lower high, and then you have a new higher high. That lower high point to your higher high becomes your range. Why is it a range? Because the movement from the lower high going up took out a previous higher high and made a new higher high. In other words, you have a break of structure. And the moment that happens, you should expect some pullback or retracement or correction. But those 2 points, the lower high and the higher high, or the reference low and the reference high, as we put it yesterday, is going to become your swing range or swing structure. And within this range, these 2 points, you can use the Fibonacci tool to measure. And then we understood or learned that any level below 50% when you use your Fibonacci tool is called the discount zone, and the level above the 50% is called the premium zone. So, in a bullish market or situation where you are looking to buy, you will only be looking to buy around the discount, preferably something around 61.8% or 78.6% or 88.6%, something around those levels. Okay. And if you want to sell and you have your swing range and use your fib to measure, you would want to sell at premium. And in that sense, you have to flip the fib for the measurement. And it's the same thing. You sell around 61.8% or 78.6% or 88.6%, okay, at premium. So this point three here is saying that the area of interest or the level of price that you find as psychologically compelling must fall within, or is better if it falls within a premium or a discount zone. This means you need to define the swing or trading range, which I've already explained, and identify a clear, valid reference highs and lows to guide the framing of your trade. Okay, so that's what I just explained, and we will look at it on the chart also. For me, after getting my swing range and marking my premium and discount area, I like to use either demand supply, but most importantly, I like the concept of support resistance. And over time, I have refined support resistance into what I call PSR, precision support resistance. The precision support resistance is an exact or close to a precise point where price has been resist have been used as one resistance, okay, and at the same time has been used as support. You must make sure that that same level is being used as support and resistance at the same time. Okay, you must make sure that that happens. Okay, you have to make sure that the PSR, okay, the PSR that you are marking, okay, inside your discount or premium zone has been used as both support and resistance. That is what makes that level or that price very strong. And from the um and you should at least have 3 to 4 touches, okay, 3 to 4 touches off or from the pre PSR or the resistance in the past. Okay, you must see that price came to that level and there was a reaction. Okay, you must see that about 3 to 4 times. Minimum 3 times is okay. Okay, now um also this same um precision support resistance level of price, you must see that there is always an impulsive reaction that takes place off or from that price. Okay, off or from that price. And I'll show you what I mean by impulse. Okay, impulse. Like you can say impulse, or you can say momentum, or you can say like a big move. Okay, now let's go to the chart and then try to put all that I have read into effect. Okay, so today we want to look at okay, let's go back to forex itself, and um let's look at GBP USD today. GBP USD today. Are you all with me?
Yes, sir.
Good, perfect.
Yes, yes.
So let's look at GBP USD. Now, let me start by let me clean the chart first. Let me clean the chart and go to the higher time frame. I always like to begin from the higher time frame. Let me clean the chart and then go to the higher time frame. So let me go to um let me start from 1 month time frame. So this is GBP USD. Okay, GBP USD. Now, if we want to start from where at the step one, then step one should help us tell us that we need to establish who is in domination, okay, on this chart. Okay, so if you look at the chart closely, who do you think is in domination?
The seller.
Let me go
The
to,
seller.
let me leave the monthly, let me go to 12 months or 6 months rather, the 6 month time frame. Okay, now let come again. Who is in domination?
The seller.
A
Let me
seller.
go
It's a
to
bearish market.
one month again. I want to ask again. Maybe 3 months will be better. I want us to see the whole chart, plain and clear. Good. Now, who is in domination?
Still the seller.
We have the seller there.
We have what?
The
Seller.
seller.
Sellers are in charge.
Yes, sir.
Yes.
Okay. Why do you guys say sellers are in charge?
Because this second part,
Because we have
the
the
Let
side.
me give you the line chart. So this is the line chart.
It's
This
a
is the line.
bearish market.
This is the
So
line
the
chart.
sellers are the one in charge.
Okay.
sellers are in charge.
Okay, good. So let me, if the sellers are in charge, what do we need to see to say that sellers are in charge?
And there is a break of structure to the
We've seen a break of structure.
Okay. So step one, we said from step one, we are saying that you need to establish who is in domination. To do that, you must ask yourself, what is the trend? It is better to view the trend from the top-down perspective or from the higher time frame. So I just moved to the higher time frame. Now, to be able to get a trend, you must look at the footprint of price. You know the footprint through the market structure, through the higher highs, lower highs, lower lows, lower highs. If lower lows and lower highs are dominating, then the market is likely bearish or is bearish. If higher highs and lower highs are dominating, then the market is bullish. For a stronger trend confirmation, you must at least confirm that the trend is one side on 3 to 4 time frames at least. Okay, so let's start from this point. So, one, you guys are saying that GBP USD is bullish. Okay, so if it's bullish,
Yes.
then we need to be seeing lower lows, lower highs dominating, right?
Mm-hmm. Yes, sir.
yes.
Perfect. So if you look at if you look at what we have right now, I can see that we have a low from the top, we have a low, and we have a
Mm-hmm.
high, lower high, lower low,
Mm-hmm.
lower high. This is kind of relatively equal lows, but let's still make use of it because this is a lower high. This that did not give us a high, so it's a lower high. Then we have a lower low,
Mm-hmm.
and then currently we got
A lower high.
we are getting some kind of a we are getting a lower high. Oh, why is this thing behaving this way? Then we're getting something like a failed low. We still have a lower high, but within these structures, it's
Uh, internal structure.
yes. Okay, good. So um this is the structure that we have. This is what we have, right? So you guys are right. It is clearly a downtrend from where I measured from, right? Right?
Yes.
Good. But check the thing well. Are you guys missing something? Ask yourself whether you are missing something. So, what is the last low point here? This is the last low point here. Is it not this point here?
It is.
Yeah,
Yes, good. That's the last low that we have. Now, check the right side. If you check the right side, do you have another point that is lower than that point? I can see here. Can you all
no.
see here?
From where it started, we started seeing the candle.
Yes. And this is like years back. Okay. And
Mm-hmm.
this might not be relevant right now. It may be in the current year 2025, 2026 that we are going because this is like 1980 something. Yes. But I am telling you, it is relevant. Why? Because price has been targeting this area, and that's why it started falling. It has been falling from this place here, up here. This area was what year? 2007. Yes, from 2007, it's been dropping to this place, targeting 1980 something low, where price started from going up. Are you guys getting my point?
Yes.
So if we are to take
Yes.
it that this low here, where price started, the pair started the movement. If we are to take into consideration this place, because now we are assessing the overall chart, okay, and that's what you must do for any pair that you are trading. Any pair you are majoring in, you must make sure you have the entire information and you understand what is happening on the entire information before you go into within maybe a particular range or the current range or structure to be looking for trades. So let's say price started from here. What is the first area of high that it made? It gave us this, let's say this point. It gave us this point, dropped down, moved up, dropped down, then it went up. Let's say I will use this one as the high, and then it came down. So up to this point, higher high, lower high, higher high, lower high, higher high. Price dropped back and took out all these lower highs. Okay. Now, after taking out all these lower highs, it dropped back to this place, moved up, and then came down also here. Then it made a very big move to the upside. Oh, what is this? Okay. Make a very big move to the upside here. Taking out, observe closely, oh, taking out this previous high point. Are you seeing that?
Yes, sir.
Good.
Yes.
It took out this point. So now we could say that because price took out these lows here, okay, the pattern or the uptrend that was from here to this area here, okay, had been changed. We have had a change of character for a bearish trend, okay, because when price got up, it dropped down to take the last important lower high. Price took it out, okay, and then so once that happens, we should have gotten like a retracement or a pullback into somewhere here, and this all-time high here at that point should have been protected. So when price got into this area here, you see it got here and made a reaction to drop down. Are you seeing that?
Mm-hmm.
This area, this high
Yes.
shouldn't have been taken out because we have taken a previous reference or low, external low out, which is a change of character or break of structure. Once this happened, price would just have to go and retest or pull back into this premium, and we should have gotten a sell, a bigger sell from here, this point down. But the market always does what it wants to do. This sell, though it sold, but it failed. Failed because it's not like it didn't sell, it sold, but it failed. It failed because it should have come down to take out these lows to give us a bearish trend. Now, it didn't do that, but it rather went up and make a move to the upside, made a move to the upside and took out this high. The moment this high has been taken out, it means that the bearish trend or structure that the market was giving us is not active anymore. Okay, so this is the market telling you that I am telling you that I want to change to a bearish market, but now I don't want to go to the bearish market again. I want to now continue the bullish market. Are you guys getting my point?
Yes, sir.
Yes.
Gabriel, are you getting it?
Yes. Yeah, I'm with you, boss.
Yes, good. So currently, from my understanding, I can see the trend as higher high, lower high, higher high, higher high. We need a lower high. Okay, so lower high we can have up to somewhere here, and then from here, this is like a deep retracement to the last lower high. From here, we should have gotten a move to the upside for a new higher high. But it also went up, got only to here and failed. Then it started dropping down to this place, went up, and still came to this place. Do you get it? So, what I can see with the pair is that the pair is consistently um, nullifying or going against the intentions that or the information that it is giving to us. Okay, so it tells us it wants to go bearish here, then it defiles it, and then it gives a bullish indication. Now, after doing that, we get a new lower high. Now it comes back to this place. It should have given us a new higher high, then it failed again, and now it is dropping. So if we put all these things together, we can see that there is some kind of manipulation or confusion. Okay. But at the end of the day, we can see that the before you say that um, the market has entirely changed direction, the last important low, okay, because this one price started from this low point here, low point here. So this last important low point must be taken out before we can confidently say that the market has changed or is changing direction. Okay, so now the market comes down to this point, but it doesn't take that important low point out. So for me, I can still argue that though we are seeing a bearish market here from up here up to here, we are seeing a bearish structure from up here to down here. We are still within the bullish market from down here to the up here because this low has not been taken out. Do you guys get my argument?
Yes, sir.
Gabriel, are you
Yes,
getting my
I under
argument?
yes, I understand your point.
Perfect. Perfect. So we are still within that. So one other thing I can see here is that the market tells us I want to sell from this point here. Then it's telling us that after selling, I want to buy by doing
Because
this.
the overall is buying.
Yes, but I'm trying to explain what happened here because here this was a valid change of character up from here to here. This low being taken out was a valid change of character. Okay, so the market should have sold from here, but they didn't. Now, so it telling us that I told you I want to sell, but failing here to sell from this side and then giving a new break of structure means that I want to sell, but after I sell, I want to now buy. Do you guys get my point?
Yes,
Mm-hmm.
Break of structure to the downside, break of structure to the upside. That's the meaning. I want to sell, but after I sell, I want to buy. So now that it tells us I want to buy, it comes down to fulfill the sell, which is this thing that we have seen from this move up to here. The sell has now been fulfilled. So there is a higher chance that this buy indication it gave us here should also be fulfilled. So in the coming years, okay, there is a higher likelihood price will move from somewhere down here to reach out to this place and give us a new higher high. And this pair can be more bullish. Do you guys get my point?
Yes, sir.
You get my point?
they are resting above. Uh, yes, you have unmitigated zone there.
I'm not even talking about unmitigated anything. I'm just talking about the structure, just the structure. Okay. The structure shows that the market would, in the future, no matter how many years it will take, in the future, the market will continue this bullish market because it has broken this high. Okay. So that is a break of structure. It breaks this high, but it it is failing to take this low out. Do you get a point? Do you get a point?
Yeah, try.
Good.
Yeah.
So because of that, there is a higher chance that in the future the market will go up and continue giving us higher highs. Okay, so that is the context with which I want you to understand this pair from. So, from that sense, the market is bearish right now. Currently, is bearish from top here. But do is there any indication or anything telling us that the bearish movement is going to end? That's something we have to look for. Okay, it's bearish, but is there anything to communicate to us that the bearish movement will end or is going to end? We have to look for something like that. But for now, I can take here as my uh, I have a low point here, a high. I can take here as a high. Sorry, a high, a lower high, a higher high. Do you get my point? Are you guys with me?
We are there, sir.
Yeah, I'm with you.
Yes. We have a high and we have a lower high. We
Mhm.
must get a higher high. Or we have a high. This is the second opinion. Or the second opinion is going to be from down here. We have a higher high. We have a lower high. We have a higher high. Price takes out the last lower high. We need a failure swing. Okay, we have a break of structure, so we need a failure swing. We need these internal highs to be cleared, so we need something like this, and then the market points down for a bearish move. Do you see this option too?
Yes, sir.
We are just
Yes.
looking at the structure to determine the trend. Okay, so we have a high, a lower high, a higher high. This last low point, this lower high is taken out comfortably. Okay, it's taken out. So once it's taken out, we need price to go up, do a pullback, and then give opportunity for